Hello again everyone and welcome back to the channel. I hope you are all doing really well. So yesterday during the Australian trading session, I sold off large parts of two of my strategically held inflation trades following two sessions of the Australian share market reacting to the continued poor inflation figures coming out of the USA. So in this video, I'm going to talk a little bit about the thinking behind those trades and what I will potentially be looking to do going forward, as well as giving some of my own commentary on what I think inflation is going to look like going forward and how that may affect my trading. So let's get into it. So if you have been following my channel for a while, you may have seen that about a month ago I had been really interested in the inflation data coming out of the USA and was weighing in to the whole debate on whether the inflation is indeed transitory or not. I believe that there was still more increased inflation to come and had been building up longer term positions into stocks on the ASX that I thought would fare quite well if there were to be a bump in inflation. Those stocks being Australian gold miner Northern Star Resources, as well as Australian iron ore miner Fortescue Metals. The thinking behind having these two stocks in my portfolio was that gold miner Northern Star Resources produced a commodity that traditionally acted as a hedge against high inflation, gold, while the other stock, Fortescue Metals, produced a commodity, iron ore, that traditionally performs well in a recovering economy, as governments like to encourage building projects to bring the economy back to life, and iron ore is generally essential for these projects as it is the key ingredient in steel production. So there were two stocks that I felt fit the climate of the time. The other criteria I placed on these stocks was that I wanted mature mining companies that paid a regular dividend, which both of these companies satisfied. Also, since I live in Australia and Australia probably does mining and mining stocks better than anywhere else in the world, it seemed like a no-brainer to make the trading play here. Looking at the trades, Northern Star was perhaps the more dramatic mover of the two following the inflation data that came out of the USA on Wednesday. You can see the mark that indicates the dollar cost average of the remaining shares I hold, and this vertical line here indicates the start of July. The dollar cost average of the shares is up a little bit because I did trade and accrue a few more shares in the stock on Wednesday, just before the news came out, and also when the rise in the price had started. I think the market was anticipating the worse than expected inflation results that did come and therefore was starting to price it in. However, when I sold it in the first hour of trade on Friday, it still made for a nice profit on paper of about $400. However, when you factor in the trading on Wednesday, when my dollar cost average amount for almost 800 shares was sub $9.90, the overall profit from Northern Star that I made in this period was closer to the $650 mark. Plus, I accrued more shares in the stock, with 40 still being held in my portfolio at this stage. Now, looking at my trade on Fortescue Metals, again we have the line indicating the start of July, and we have the line showing my dollar cost average value of the remaining shares I hold. Just like with Northern Star Resources, I had been accruing the stocks around this time, about early to mid-June. The Fortescue Metal trade was one that I wish I had been a little more proactive with in my accrual of shares before my sell-off yesterday. As you can see, there was a number of good trading opportunities in the days and weeks leading up to yesterday. Now, the reason why Fortescue Metals got so hot was because iron ore prices yesterday had hit a near record high, and this company is probably the largest pure play iron ore producer in the world. Based on my dollar cost average, I cleared just short of $1,000 with this trade, which I again sold during the first couple of hours of trade on Friday. I potentially could have got a slightly higher price had I held out for a couple of hours longer, but I am unfortunately not blessed with the gift of hindsight. So while I did cash out my positions, I'm hoping to be able to rebuy in when the prices come down and move at least some of the profits made into my crude or longer term positions in these stocks, particularly Northern Star Resources. I thought yesterday was a good time to cash out because there are a few things that make me think there will at least be a temporary decline in the markets coming up. Firstly, as we pointed out before, iron ore and a number of other commodities have hit record highs lately. However, a number of other commodities have started to decline in recent times. So looking at oil, it looks like it may be starting to at least be in a temporary downward trend after a decent rally. This is partly because OPEC continues to squabble and we see an increasing oversupply of the commodity. Furthermore, just recently, Saudi Arabia and UAE have pledged to further up their production numbers. So this will only potentially move the price down further. So we've got a case where supply is now starting to surpass demand. Lumber is a commodity that grabbed headlines over its astronomical rise, is now lower than it was in November 2020. Lumber is also an important commodity for the building industry, so for me could potentially reflect a bit of a future trajectory for iron ore to an extent once supply catches up with demand, or if demand was to slow down, which could potentially occur if we see further restrictions placed on societies due to a resurgence in the coronavirus. There seems to be an increasing spread of COVID-19, in particular the new Delta variant, in many countries which had at least temporarily thought to have been on top of the virus in recent times. I think this could potentially be leading to a bit of a market drop-off if governments start to take harsh action by imposing restrictions on their populations. It has actually begun here in my native Australia. The two biggest cities are currently in lockdown due to rises in case numbers. Other major commercial centres who have imposed restrictions include Tokyo. Also, London has had a short lockdown in recent times. It seems to still be far from being on top of the virus situation. Will America soon follow? It's quite possible, especially given that many states still have the unemployment benefits available to support such an action. Any sort of action like this will have a negative impact on stock markets and is making me think that there could be an opportunity to buy back into these stocks in greater quantity by buying a potential near future drop in share price. As for inflation, a number of OECD central banks have recently signalled that they will cut back on quantitative easing, such as Australia, New Zealand, Norway and Canada. And even the US Federal Chairman Jerome Powell has actually started giving stronger hints about moving towards tapering their program. As long as quantitative easing keeps happening, even in a tapered state, there is going to be a continued increase to the money supply. At the same time, governments are still spending big and central banks are letting them do it unchecked at the moment, again furthering the money supply. And finally, there has been no real talk about increasing taxation as a means of starting to balance the huge deficits that are being run up by governments. However, at some stage, this is going to have to be paid. So what is the plan for this? So the potential government plan might be to pay off the debts that they are rising now with inflated currencies in the future. The risk of doing so is that inflation will continue to balloon and actually become even harder to rein back in. So what I think is that as long as governments can continue to spend unchecked, central banks continue undertaking large-scale quantitative easing, and there is no attempt to pay back the debt through curbed spending or increased taxation, there will be more inflation, aka making the inflation not transitory. Well, the funny thing about the use of the term transitory, I suppose, is that central bankers are not defining what transitory is. How long is this period that is supposed to be transitory? Is it a month? Is it 6 months? Is it a year? Is it 5 years? It seems that inflation will likely be transitory until government revenue raising and spending policies, as well as central banks' approach to funding these policies, changes drastically. Perhaps then it will no longer be transitory. However, will this change? Whoever makes the decision to change the policy is likely going to commit career suicide. General populations love being given free money, low taxation, and seeing governments do things. A reversal in policy will see general populations not receive free money, have an increase in their tax rates, all the while governments impose a degree of austerity. If I was going to be the president or prime minister or the head of the central bank for 4 years, it would be very easy to keep following the current formula, as it means I will not receive much pushback from the general public and will be pushing the problem down to my successors and not having to deal with it myself. Anyway, I know I probably started to ramble a bit there, but I think we are going to see continued high inflation for some time to come. I also think we are set to see some significant corrective action across the stock markets going forward. So I will be looking to at least move back into my gold position in the near future to hedge against inflation, and we'll be monitoring the mining stocks in relation to future government announcements around societal restrictions in relation to COVID, as well as stimulus packages. That's about all I wanted to talk about here. I hope you found this interesting. If so, I would encourage you to leave a like on the video, as this is the great way to show support for a small channel like my one, as it means the video is likely to be seen by other potential viewers. Also, if you did enjoy this and would like to see other videos that are related to stocks that I am watching and trading, I would invite you to subscribe to my channel. I try to put a stock related video out most days. Thanks everyone for watching. I hope you have a great weekend. May the markets trade in your favour when they reopen. Cheers.